Hey there, Dave Keller here with Market Misbehavior. Today we're going to continue our popular series of choose your own adventure style videos to talk about 4 potential different scenarios that could play out for the Nasdaq 100, the QQQ, between now and the end of January of 2025. We're going to be going through year end, which is a seasonally pretty strong period, into the beginning of next year. In January, after such a strong year, has been a little more mixed results if you look back through market history. What do you see as next for the Nasdaq 100? In this video, we're going to compare 4 different potential scenarios. We'll talk about what the chart might look like. We'll talk about some of the conditions that could drive those 4 different scenarios, thinking about the Magnificent Seven, think about breadth conditions, momentum, all of the above, and much more. We'll also look back at our last video in this series from September and talk about what actually happened for the Nasdaq 100. Should be a lot of fun. Let's talk about those 4 scenarios. But first, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions. And when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so before we get to the current market environment here in December of 2024, let's look back to September, 3 months ago, which was the last time we did a choose your own adventure style video for the Nasdaq 100. Here were the 4 scenarios we talked about. Now, if you remember, coming out of the summer, the Nasdaq 100 had made a new all-time high in July, but then had come down to a steep new swing low in early August. We then continued sort of this coil pattern, and in that last video in mid-September, we talked a lot about the coil pattern, what sort of signals could be important coming out of that particular price pattern. If you look at what happened in the 6 weeks after, from mid-September to late October going into Halloween, scenario number 2 almost perfectly matched the trend of the Nasdaq 100. That is, we had we accelerated a little early, so it actually looked like scenario 1 was looking very good through the end of September, but then we sort of lightened up a little bit, and that initial thrust higher in September actually lightened up a bit, and by the end of that month of October, we were pretty much almost exactly where that number 2 arrow would have suggested. So if you picked scenario 2 last time, well done, you were spot on there. Now again, as always, the point of this exercise is to think about different scenarios, and even though scenarios 3 or 4 did not play out, I think it's super important with an exercise like this to really think about those bearish potential outcomes, right? What would you see? What sort of evidence would proliferate? What signals, what patterns would you look for to confirm that the more bearish scenarios like scenario 3 or 4 are actually playing out? In the case of the last video, we never got those danger signs, right? The breakout happened, we broke out of the coil pattern, and it continued. Now, since that late October timeframe, obviously November and December so far have been quite strong, which actually matches the traditional seasonality of an election year, post-elections, pretty consistently, right? If you look at 2020, after Biden was elected, if you look at 2016, after the first Trump election, November, December are actually quite strong. And that's pretty common. There's usually a lot of optimism after a new president of any sort. There's after the elections, and we've gone from a period of uncertainty to a period of certainty, the market actually tends to be quite strong. So I'm not surprised that we've had all of that strength from November 8th through mid-December. The question we're going to be talking about, though, is what happens next, right? You assume the markets are going to be probably okay through the end of the year, but what happens in January? The January after a presidential election is a little more mixed. Having said that, let's get to the 4 scenarios we'll talk about today. Now, we're looking at the same chart of the Nasdaq 100, but now we're updating those 4 scenarios from mid-December to the end of January of 2025. So we'll be going through the holiday season and really into the beginning of next year. Let's talk about those 4 scenarios. The very bullish scenario, scenario number 1, would essentially mean a continuation of the trend we've had off of the August low. If you think about the initial move higher in mid-August, the pullback into early September, we've then sort of settled into a pretty consistent uptrend in October and November and now mid-December. So I basically drew a trend line that continued kind of the average trend over that period, basically assuming that the rally phase we've seen into mid-December continues with no real change through the end of January. What would need to happen for that scenario to play out? I would argue that would mean the Magnificent Seven stocks like the Metas and others that have been breaking out need to continue higher. You need to see renewed strength in Alphabet, in Broadcom, which gapped higher on earnings this week, which all those other sort of mega cap growth names need to continue to get it done because those are the biggest weights of the indexes. There's no way the something like the QQQ is going to continue this trend unless the Magnificent Seven are really driving. So you don't really see any rotation away from those Mag 7 names. Some of the weaker breadth conditions we've seen in December all need to go back to positive. You need to see a lot of stocks making new 52-week highs to really sustain the growth that we've experienced in the last 6 to 8 weeks. So I would argue the very bullish scenario for the Nasdaq probably puts the Nasdaq 100 up in that 550, 560, maybe 570 range by the end of January, which basically is just continuing the trend that we've experienced from the August low. Scenario 2, a little more measured. I would say in that second scenario, we probably continue higher into year end. And while we don't continue the pace that we've experienced in the last couple months, we lighten up a little bit. But we don't undercut this week's high, which is around 533. So the Nasdaq 100 does continue higher. It's just this pace slows down a little bit. Maybe we get our final rate cut of 2024. Looking forward to 2025, we get some inflation data that's maybe a little higher than expected. Maybe the Magnificent Seven stocks kind of lighten up a little bit, and even though strength in other areas of the market starts to emerge, the fact that the Magnificent Seven stocks are no longer in the driver's seat starts to put pressure on that uptrend, and we slow down a bit. So conditions are still good. We're still in a bull market of higher highs and higher lows, but a little less optimism, a little less euphoria maybe than we've experienced in Q4. Scenario 3 is our first bearish scenario. In these next 2 scenarios, we don't get much higher. And while we may drift a little bit higher into year end, scenario 3 means we start to roll over. All of that optimism we saw in November and December starts to change. The Magnificent Seven stocks, which have been so dominant, maybe start to change a little bit. And the weakness in the Magnificent Seven, for example, NVIDIA breaking down below support around 132, the most recent little rectangular consolidation period that NVIDIA is in. It fails to the downside, fails to hold support. Stocks like Meta, which have broken out, kind of pull back below $600 a share. The S&P doesn't get much above 6,100, and we start to talk about potential pullbacks. Maybe again, if inflation data remains a little more escalated, if the Fed meetings talk a little bit more about minimal rate cuts and more concerns about the return of inflation, maybe that spooks the market a little bit and starts to put some downside pressure on other areas of the market. In scenario 3, there could be areas of the market that look quite good, right? Areas like financials or energy. Materials could do well, but because they're not big weights in the indexes, something like the Nasdaq 100 really starts to suffer, and all of a sudden something like the Dow is outperforming the Nasdaq. That's what scenario 3, the mildly bearish scenario, could look like. Now, you always have to have a doomsday scenario, and really one of the points of this exercise is to think primarily about number 1 and number 4. Think about a really bullish scenario, which may not be likely, but is possible. Think about a very bearish scenario, again, depending on how unlikely you think it might be. Think about what could happen, what could set the stage for a very, very big deterioration. Even in scenario 4, I would say the next couple weeks through the holidays, probably a little bit higher, but January starts, and all of a sudden it's a tale of two different markets. If you want an example, by the way, of what scenarios 3 and 4 could look like, look back to 2021 and 2022. 2021 and 2024 were very similar years, consistent uptrends, low volatility, kind of long and strong years. But 2022 was a 9 or 10 month corrective period with a fairly consistent period of weakness. And that started with a weaker January. So scenario 3, and in this case scenario 4, means 2022 looks a lot like 2025. And we start to see all of the optimism, all the euphoria that really dominated our thinking in Q4 all of a sudden completely changes. The year ends, a new year begins, and it's dramatically different. The Magnificent Seven start to pull back. Other areas of the market, instead of sort of taking on a new leadership role, start to rotate lower. Defensive sectors probably do much better. I would say one of the biggest tells that we're getting into a scenario 4 would be defensive sectors like utilities, consumer staples, real estate really start to outperform on a relative basis. On the RRG, they're all rotating in a position of strength, and we get the impression that big institutional investors are getting super defensive to try to ride out a period of market uncertainty. One technical comment I would say to differentiate scenario 3, the mildly bearish scenario, with scenario 4, the very bearish scenario. I think 500 is an important level to watch. That was the July peak, which is a pretty meaningful peak before that last big drawdown into early August. That also was the most recent swing low here in mid-November. I would say scenario 3 finishes above 500 by the end of January. Scenario 4 means we undercut that. And by the end of January, we're talking about whether the Nasdaq 100 will find support around 450, which is the September 2024 low. So those are the 4 different scenarios and what those charts might look like. So there you go. Those are 4 potential paths for the Nasdaq 100 between now and the end of January 2025. Which of those scenarios do you think is the most likely, and why? Don't forget to drop a comment below with your vote and your justification as to why you think that's the most likely scenario. Feel free to read some of the other answers as well. The goal of this exercise is to make you think. It's called probabilistic analysis, thinking of different scenarios and stretching your expectations outside of your preconceived biases. So don't forget to vote below with your scenario, which one you pick and why. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts.